Now speaking, Rachel Schachter, Investor Relations. The Lovesac Company's quarterly earnings call included Chief Executive Officer Shawn Nelson, President, and Chief Operating Officer Mary Fox, and Chief Financial Officer Donna Delamo. The company cautioned that some of the information discussed may include forward-looking statements regarding future events and their future financial performance. Actual results could differ from these statements due to risks and uncertainties which can be found in the company's SEC filings. Additionally, they discussed non-GAAP financial measures such as EBITDA and adjusted EBITDA, and provided a reconciliation of GAAP financial measures to non-GAAP financial measures in their press release. CEO Shawn Nelson then took over the call. Now speaking, Shawn Nelson, Chief Executive Officer. He has been an invaluable asset to Lovesac, and I want to thank him for the many contributions he has made throughout his tenure. We wish him all the best in his next endeavor. Lovesac had a successful first quarter, beating expectations and outperforming the category, which was down 20%, with total sales of $141.2 million and total comparable sales of 15.1%. The company launched their new angled side product 2 months ahead of schedule, and initial sales rates have confirmed that the addition can drive significant upside for Sactionals among new and existing customers. Lovesac sells value products that are adaptable, upgradable, changeable, and washable, and they have a lifetime guarantee. They are a couch specialist and the strongest one in the marketplace, and their platform-based approach to innovation allows them to introduce new add-ons with regularity. They maintain constant contact with their customer base directly and have a repeat business rate of 40%. Despite an uncertain macro environment, Lovesac is cautiously optimistic and has reiterated their full-year outlook while sharpening their Q2 outlook. They believe they have significant growth runway ahead of them as they are looking to enter more home plus tech categories. Lovesac announced Donna Delamo's retirement as CFO and the appointment of Keith Senior, as well as Jack Donahue's 7 years of service with the company, including his roles of President and Chief Operating Officer, and more recently, Chief Strategy Officer. Now speaking, Mary Fox, President and Chief Operating Officer. Lovesac reported strong first quarter results that beat expectations in spite of a difficult macro backdrop. The net sales growth rate of 9.1% is ahead of the category on a one-year basis and up 244.4% from pre-pandemic levels. Adjusted EBITDA margin increased 980 basis points over the same 4-year time period. Customers are being more cautious with discretionary purchases, but Lovesac's brand metrics and market share gains remain strong due to successful operational execution. The company's strategic initiatives center around its Infinity Flywheel. In product innovation, Lovesac launched an angled side silhouette in May to address barriers to purchase for consumers and has seen immediate traction in KPIs and positive feedback. For its omni-channel experience, e-commerce channel performance was very strong at 28.7%, and customer satisfaction scores continue to increase. In terms of its ecosystem, Lovesac is investing in high ROI performing programs and hyperlocal marketing, deploying new tactics such as direct mail campaigns and prime/linear TV buys. Disciplined infrastructure investments include AI-guided experiences for customer-facing service associates and order delivery in just days. Now speaking, Donna Delamo, Chief Financial Officer. In the first quarter of fiscal 2024, Lovesac's net sales increased $11.8 million, or 9.1%, to $141.2 million. Showroom net sales increased $2.3 million, or 2.9%, to $83.6 million, and internet net sales increased $8.9 million, or 28.7%, to $40.2 million. In terms of product categories, Sectionals net sales increased 11.2%, Sacs net sales decreased 10%, and other category net sales increased 4.2%. Gross margin decreased 100 basis points to 50.1% of net sales. SG&A expenses as a percentage of net sales increased by 560 basis points due to planned deleverage within employment costs, selling-related expenses, rent, and continued investments to support current and future growth. Advertising and marketing expenses increased $1 million, or 6.4%, to $16.9 million for the first quarter of fiscal 2024 as compared to $15.9 million in the prior year period. Operating loss for the quarter was $5.9 million compared to operating income of $2.6 million in the prior year period. And net loss for the quarter was $4.2 million or 28 cents per diluted share compared to net income of $1.9 million or 12 cents per diluted share in the prior year period. For fiscal 2024, Lovesac is reiterating its outlook for net sales of $700 million to $740 million, approximately 30 net new showrooms, total comps in the high single-digit to low double-digit range, adjusted EBITDA margins in the 8% to 9% range, and earnings per share in the $1.83 to $2.24 range with a share count of 16.4 million weighted average diluted shares. For the second quarter, Lovesac expects net sales of $149 million to $151 million, a total comparable sales increase in the 3% to 5% range, adjusted EBITDA of $1 million to $1.5 million, and loss per share of 12 cents to 16 cents. Major investments in the business are continuing to be made, and Lovesac expects to use cash during the second and third quarters of the year before generating substantial free cash flow in the fourth quarter. Now speaking, Shawn Nelson, Chief Executive Officer. The company has seen consistent category-leading results, even in the current macro landscape. This success has given them the confidence to reiterate their full-year guidance and continue to invest in initiatives that will drive future growth. The company is taking significant market share in real time based on their numbers. Both Donna and Jack have been integral in driving this consistency over many years, building a strong foundation for the newer members of the team to build upon. They are confident their top-notch team can carry the momentum forward and take it even further. Oppenheimer & Company analyst Brian Nagel inquired, "How should we expect gross margins to trend in the coming quarters?" Donna Delamo replied, "Brian, regarding gross margin, we are looking to highlight the benefits." Oppenheimer & Company analyst Brian Nagel inquired, "What changes should investors expect in the company's trajectory from 23 to 24? Donna Delamo replied, "Thank you for the question. We anticipate a 200 basis point increase in our gross margin due to lower freight costs that we paid for last year. We have line of sight into container costs continuing to come down, though there will still be additional costs such as demurrage, related to inland transportation. Last mile delivery is a headwind, but we are mitigating it through negotiations and other carrier opportunities. We have also accounted for higher labor costs in our guidance with extra padding." Oppenheimer & Company analyst Brian Nagel inquired, "Can you provide some color on the pull forward in sales, and how that might inform any additional promotional activity you may consider?" Mary Fox replied, "Good morning, Brian. Our recent promotion in April exceeded our net sales expectations and contributed to the shift in Q2 that Donna referenced. Our successful results demonstrate the strength of our brand and our ability to acquire new customers even when there isn't a promotion. We're also being more programmatic in targeting customers with specific offers rather than site-wide promotions. This has been holding steady since the second half of last year, and we've seen an increase in share as a result. Overall, we feel good about our plans for Q2, and the teams will continue to be agile and adjust accordingly." Shawn Nelson replied, "I agree that we will remain disciplined and diligent in our approach to building the brand in the long term. We understand the importance of being careful with promotions during this period, and are focused on taking a strategic approach to ensure success." Canaccord Genuity analyst Maria Ripps inquired, "Can you provide any insight into current consumer trends, particularly regarding discretionary spending and the difference between higher-end consumers and more price-sensitive buyers?" Mary Fox replied, "Good morning, Maria. We recently completed our year-end updates and we're not seeing any significant or consistent trade-down trends. In fact, the mix of premium upgrades and purchases remains flat or slightly elevated. Financing continues to trend up compared to last year, and customers are buying later at the end of promotional events, similar to other brands. This is settling back to pre-pandemic buying patterns. 38% of our customers don't cross-shop us with anyone else. This brand strength is reflected in the results." Canaccord Genuity analyst Maria Ripps inquired, "Could you provide an update on the progress of your infrastructure tech and R&D investments? What areas of the business are they designed to impact most?" Mary Fox replied, "Thank you for your question. Our tech investments in Q1 enabled us to optimize inventory levels, reduce working capital, and improve customer satisfaction. Additionally, we've begun piloting an AI platform called Thankful to generate machine-generated responses for our frontline associates. We understand the importance of investing in research and development for long-term growth." D.A. Davidson analyst Tom Forte inquired, "Shawn, what insights have you gained from data analysis regarding customers who appreciate the functionality of your product but don't purchase it or buy additional units? How has the introduction of roll-arm furniture impacted your results?" Shawn Nelson replied, "Thanks for the question. Sactionals is our successful couch platform due to its versatility. We've invested in research and development over the years to refine the platform and make it more competitive. Our focus is on comfort and style, which is why we launched roll-arm to appeal to a more traditional customer. Angled side is the modern version of that, offering a different level of comfort and an aesthetic that we didn't have before. With angled side, you can have interchangeable backs and arms, allowing for larger sitting spaces and greater flexibility. We're thrilled with the response to the launch, and we believe there are still plenty of opportunities left to further improve the Sactionals platform." D.A. Davidson analyst Tom Forte inquired, "What were the results of your 25th anniversary celebration in terms of brand awareness and social media engagement?" Shawn Nelson replied, "We have seen our unaided awareness remain low, which presents a great opportunity to reach more people. Our advertising has been successful, as evidenced by our 25th anniversary celebration, which delivered over 3 billion impressions and included A-list celebrities, social media influencers, and musical artists. We are resonating with teenagers and kids in ways others cannot, and this is driving sales of large purchases for their parents. Our brand resonates with customers like no other furniture brand, and we will continue to lean into this superpower. Roth Capital Partners analyst Matt Caranda inquired, can you clarify the difference between showroom comp and revenue growth, and what are the key drivers for the year-over-year improvement in May sales? Donna Delamo replied, yes, Matt. Our first half comps are in line with expectations. We saw a slight shift due to planned promotional activity at the end of Q1, which pulled forward demand. We have about $15 million in orders on our balance sheet that will be shipping into Q2. This is why we are reporting higher demand than net sales. The timing of when the demand was created versus when it ships impacts the reported numbers. Mary Fox replied, Matt, we were delighted with the success of our Memorial Day promotion. We had maintained a consistent promotional cadence in the second half of last year and coupled that with a soft launch of new product lines. Our investment in the 25th anniversary celebration yielded impressive levels of media impressions, which contributed to strong performance in the quarter and looks to have positive long-term effects. Roth Capital Partners analyst Matt Caranda inquired, can you please explain the assumptions behind the 200 basis point gross margin increase for Q2 and how it affects the adjusted EBITDA guide, particularly with regards to promotional cost headwinds and marketing investments? Donna Delamo replied, yes, so Matt, our Q2 gross margin increase of 200 basis points from Q1 is driven primarily by benefits from inbound freight that are greater than the year-over-year increase. We're also seeing some deleverage due to higher outbound freight costs and warehousing costs. In terms of marketing, we'll have a slight deleverage due to planned investments for our 25th brand building event in Angled Side. SG&A will also be slightly deleveraged, but all costs are planned and accounted for in our guidance. We feel confident that any upside will be invested strategically in the second half of the year. Craig-Hallum Capital Group analyst Alex Furman inquired, what factors have contributed to the increase in average first-time transaction value for Sactionals purchases? Sean Nelson replied, thanks for the question. Our Sactionals average order value has been climbing steadily over time thanks to our innovative products. The bigger our brand gets, the more people become comfortable taking the risk of buying larger setups. Stealth Tech was a major driver of AOV, with Angled Side set to do the same. We're still a small fraction of the upholstery category, but we intend to be there and make the best product possible through ongoing innovation. All of our investments, social media, marketing, etc., are all part of that effort. Sean Nelson replied, thank you for joining us today. We look forward to a year of growth as we work towards our long-term goals. Our investors' continued support is greatly appreciated, and we strive to create value for all stakeholders through our commitment to Design for Life.